Hello and welcome to the channel. Today we are talking why most families miss out on tax-free retirement and how life insurance solves it. Let me ask you a question. If you knew taxes were going up in the future, would you still want all your retirement money sitting in accounts that get taxed later? Unfortunately, this is the situation most American families are in today. They've been told to save their money in 401ks, IRAs, and pension plans. But no one told them what happens when the taxes change. I'm George Wambi. I'm a licensed financial professional. I'm also a tax-free retirement strategist. My mission is simple: help families protect their money, grow their wealth, and retire with confidence. Today, I'll break down why many hardworking families are missing out on tax-free retirement and how you can avoid their mistake. Here's the problem. Every dollar in your 401k or IRAs or the pension plans belongs partly to you and partly to Uncle Sam. Right now, taxes are a bit low. However, the national debt for this country, the United States, is $37 trillion and it's growing. Do you think taxes will go down or they will go up in the future? You've heard it. Pay taxes later because you're going to be in a lower tax bracket when you retire. But here's the truth. Taxes are not going down. As a matter of fact, most experts agree taxes will go up. We already $37 trillion in national debt, and who is going to pay for it? Who is going to pay that money back? The taxpayers. You and I, the future generations of this country. Now imagine this. You've worked 30 plus years to save your money. Let's say you have $500,000. You're happy. You're heading towards retirement. Your money is in retirement accounts, like the 401k, right? Sounds good right now. But when you start pulling your money, the IRS will take 20, 25, even up to 30% of your money. So you had the $500,000. Now, after the IRS takes their chunk, you now have $350,000. That is difficult. That is painful. The worst part about it, you don't have control over this. That's the law. The IRS, Uncle Sam, has to take their money. You have no control because you deferred your taxes instead of paying for them today or in an account or accounts that do not have taxes. Your money is going to grow in the IRA or 401k accounts. It's going to grow, no doubt, over time. But the issue we're having is the taxes. Uncle Sam takes a big chunk of your money. So now all your plans are thrown off because you have less than what you planned. Somebody could say, we know about that, right? However, not everybody knows. Not all families know this. Think about it. In 2008, people saved money in their 401k accounts. What happened? If people that had a lot of money in their 401k accounts, those accounts were slashed in half. Here's where it's painful. What if you're 60 or 65 years old and you're ready to retire? That is approximate age that a lot of people retire, right? Because we've kind of been structured that way, right? 65 years old, I retire, right? Now, at that point, when the stock market fell, you don't have enough time to recover. Your money is wiped, gone. One of my recent clients told me this: George, I wish someone had explained this earlier to us, how much taxes we were going to pay, and even the type of volatility our money was in when we have our retirement saved in 401ks and IRAs. Yes. And I told him, listen, my job is just to teach families. And this is really one of the major reasons I decided to teach families the truth about building money tax-free in market-protected retirement plans. There are strategies to solve this problem, and the strategies could be a little bit advanced, and so it requires a trained tax-free retirement strategist professional like myself. They use specific accounts in structured life insurance policies, such as the Index Universal Life Policies or the IUL, as a financial tool to save money for your retirement. Actually, I just want to clear something up, and please hear me well. There's people that believe life insurance is only for death, money that's passed on to the beneficiaries or dependents when someone passes away. Okay, that's foundational. However, modern life insurance, such as the accounts that I just mentioned, the IUL, is structured that you benefit from it. You use that account to build wealth for you and for your family while you're alive. Here are some of the reasons why it's very beneficial. Number one, you have tax-free withdrawals. So cash accumulated or money built or the wealth built inside your policy, you can withdraw or take policy loans from that account tax-free. Let me clarify. The accumulated money, you can access that cash through policy loans tax-free. We talked about the second part example, we talked about the 2008 market collapse, right? Now, money saved in those policies now would have been protected from market loss. So that's the second benefit. When there's an issue with the market, or the market goes down, or the stock markets go down, your money is protected. You don't lose money. Number three, you have living benefits. Let's say you end up with a major illness. Your money is accessed while you're alive, unfortunately, for your major illness, so you can take care of certain situations like therapy, hospital bills, or stuff like that. The fourth, or the final benefit, obviously, this is for all life insurance policies, is legacy planning. So in case you pass away, your legacy remains because your loved ones receive money or access to the benefits of your policy tax-free. This is a component. So those that are interested in pursuing legacy planning, right? Your loved ones get access to the policy proceeds tax-free. Your family, through legacy planning, your loved ones get tax-free death benefit. Simply said, right? I like to call this a Swiss Army knife of financial tools, right? So you have this same account that gives you tax-free accumulation, legacy planning. It helps you protection from market loss, and it also has the living benefits. Those are significant, and those are part of the challenges, problems that we face, our families face today. One tool helps with all those, right? So they're important. Let's look at an example, right? How you can be able to have an accumulation and how much money, for example, that you can get while you're alive for your retirement. So let's say you're 35 years old, you put away $500 a month in your IUL policy, that you end up with accumulation of cash in your policy. By the time you reach retirement, we are looking at approximately $730,000 accumulated in your policy. Now this $730,000, you can now access that cash and use that for your retirement. So by calculation, you end up with about $40,000 to $50,000 a year money coming to you tax-free for your retirement, for your quality of life, for your dignity. Compare that to if you had that same particular $500 saved in your 401k. By the time you want to withdraw this money for your retirement, you have accumulated at retirement, you have probably accumulated about $800,000. However, now you have taxes. Uncle Sam is waiting. We talked about this earlier. After taxes, you might end up with $550,000. How about the yearly income? We talked about in the policy, it was between $40,000 to $50,000 from that example, right? For the same money in the 401k, now $550,000, the annual income is now chopped to 30 to 35%. So comparing one to the other, the policy gave you more money than your 401k. Which one sounds better to you? Uncertainty or guaranteed protection with tax-free benefits for your retirement? We are using an example of retirement, but that cash can be used for anything else. Kids' college, buying a home, wedding for the daughter, whatever you want. This is not about get-rich scheme. It's not just about numbers per se. It's about having control of your future and your security. It's about a choice, or it's about choices and about dignity. I saw many patients in the hospital that confide, hey George, I'm here in the hospital, I'm a senior citizen, and I don't have enough money to pay my bills or even pay the hospital bill. Broke my heart. That's why I say you work too hard to actually gamble with your future or let taxes eat your savings. It's unfair to you. If the wealthy people are using life or the IUL policies to save from taxes and the market risks, why not you? They've been using these strategies for decades. It's about time you and I start as well. Think about it. How about you create a legacy your family will thank you for? So here's my challenge to you today. Don't wait. Every single year you delay, you lose thousands of future growth that wouldn't be taxed at your retirement. I'm asking you, book a free strategy session today. I've linked my calendar below this video. Through that link, click on it, schedule a session with me or with someone in our team, and let's design a plan that works for you, for your budget, a plan that protects your family, and a plan that gives you a chunk of your retirement you deserve. Thank you so much for watching this video. If you found this helpful, please hit subscribe and share this with someone you care about, someone that needs to hear it. Believe me or not, your future matters. Build it wisely. Plan well. Build some of your retirement income in a tax-free account. Thank you so much.